Lucid Motors just laid off 705 workers at its Arizona plant. And it may have broken federal law doing it. That's not the shocking part. The shocking part is that this is the second time in 4 months. Together, the two rounds have cut more than 1,800 jobs from a company that 4 years ago was being called the next Tesla and was valued at more than $90 billion. Today, its stock trades under $7. Its new CEO has quietly told Wall Street to stop expecting the numbers the last CEO promised. And a WARN Act investigation is now circling the whole thing. This is the story of how the loudest, best-funded, most hyped electric vehicle startup of the SPAC era ended up firing 18% of its US workforce in a single week. And why I think the layoffs are the least of Lucid's problems. Let's rewind. Back in 2021, Lucid Motors went public through a SPAC merger at a valuation north of $24 billion. Within months, the market pushed its market cap past $90 billion. That was more than Ford, more than General Motors at points, more than most established car companies on the planet. And Lucid hadn't delivered a single car yet. The pitch was seductive. Lucid's longtime CEO, Peter Rawlinson, had led vehicle engineering on the original Tesla Model S. His new car, the Lucid Air, had a range of over 500 miles per charge, a number Tesla itself couldn't touch. It won Motor Trend Car of the Year. It looked stunning. It had almost unlimited money from Saudi Arabia's public investment fund, which held roughly 60% of the company. On paper, everything was there. And here's what nobody's telling you about that moment. That $90 billion valuation wasn't priced on cars. It was priced on a story. The story was, EV demand is infinite. Tesla proves you can go from 0 to trillion, and if we just hand Lucid enough capital, they will be next. That story ran into a brick wall called reality. Because building cars is not building software. You can't ship a beta, you can't iterate over the weekend. Every seat, every wire harness, every drive unit has to arrive at the factory on time, at spec, and in the exact quantity you need, or the entire line stops. And in 2026, Lucid's line kept stopping. Which brings us to the first crack. In February of this year, Lucid disclosed that a seat supplier issue had disrupted deliveries of its brand new Gravity SUV. The Gravity was supposed to be the volume car. The Air was the halo product for people who wanted a luxury sedan that topped out around $140,000. The Gravity was going to be the family SUV that took Lucid from thousands of deliveries a year to tens of thousands. That was the whole plan. And a single supplier hiccup on car seats was serious enough that Lucid had to specifically call it out in its earnings release. Think about that. One vendor, one component, and the flagship growth product stalls. Now let me be honest with you. Supplier problems happen at every car company. Ford deals with them, GM deals with them, Toyota deals with them. The difference is that Ford has been building cars for 120 years and has margin to absorb it. Lucid, in the first quarter of this year, produced 5,500 vehicles and delivered only 393 of them. When your entire annual delivery target is measured in the low tens of thousands, missing a shift because seats didn't arrive is not a bump, it's a body blow. That was crack number one. Crack number two was cash. Lucid has been burning cash at a rate that would kill any company without a sovereign wealth fund on speed dial. The PIF has bailed Lucid out repeatedly, most recently with a multi-billion-dollar capital raise that diluted existing shareholders significantly. And here's the uncomfortable truth. When your survival depends on your biggest shareholder cutting you another check every 18 months, you are not running a car company. You are running a very expensive experiment on someone else's balance sheet. That's the setup for what happened on June 22nd. On that Monday, Lucid filed a notice with the Arizona Department of Economic Security. The filing announced a mass layoff at the company's Casa Grande factory. 705 workers, full-time employees, contractors, hourly manufacturing workers, and critically, the elimination of the second production shift. That last part is not a cost cut. That is a capacity cut. When you eliminate a shift, You are telling the market you do not have the demand to justify running your factory around the clock. It is an admission. And multiple outlets, including Electrek, Yahoo Finance, and Arizona Local News, put the total headcount reduction at roughly 18% of Lucid's US workforce. The company said the cuts would save about $158 million a year. Here's where it gets legally interesting. Within hours, at least one law firm, Strauss Borelli, announced a WARN Act investigation. The Federal Worker Adjustment and Retraining Notification Act requires companies with 100 or more employees to give affected workers at least 60 days advance notice before a mass layoff. The allegation being investigated is that Lucid did not give that notice. If proven, the company could be on the hook for 60 days of back pay and benefits per affected employee. That is not a small number when you are firing 705 people. Now here's the part that hurts. This was the second round. The first round hit in February. Between the two, according to layoff trackers, Lucid has cut roughly 1,819 jobs this year alone. A company that just 3 years ago was aggressively hiring, opening a factory expansion, and hyping a Saudi Arabian plant expansion has now cut nearly 2,000 jobs in a single calendar year. And this all happened right as the company was changing hands at the very top. Silvio Napoli, a veteran executive brought in from outside the auto industry, took over as chief executive at the start of June, stepping into a seat that had been filled only on an interim basis ever since Peter Rawlinson departed back in early 2025. But the loudest signal of how bad things had gotten came even before Napoli formally started. Back in May, with a full strategic review already underway, the company pulled its full-year production guidance entirely. In plain terms, Lucid told Wall Street it would not promise delivery numbers until it knew what it could actually deliver. That is a 5-alarm fire in corporate speak. When a company yanks its guidance in the middle of swapping out its CEO, it is telling you two things. 1. The previous numbers were not credible. 2. Things are worse than the market is currently pricing in, and nobody in the building wants to be caught defending numbers they cannot hit. Meanwhile, the stock. Lucid closed the last trading day of June at $6.64. Its 52-week high was $33.70. Its 52-week low was $4.47. If you had bought at the SPAC era peak, you have lost roughly 90% of your money. If you bought at what a lot of people thought was the bottom, you have lost more than 80%. Wall Street's response has been telling. The consensus 12-month price target sits around $8.40. The analyst coverage is 0 strong buys, 1 buy, 8 holds, 1 sell, and 2 strong sells. That is what analyst capitulation looks like. Nobody wants to bet on the upside, but nobody wants to be the one who officially calls it a 0 either. So they all park on hold and wait to see what the PIF does next. Now here's what I think is really going on. And this is my read, not fact. Lucid was never actually a car company competing with Tesla. Lucid was a very well-engineered luxury sedan wrapped in a stock market story, kept alive by the largest sovereign wealth fund in the world for strategic reasons that had almost nothing to do with return on capital. The Saudis wanted an EV champion. They wanted diversification out of oil. They wanted an American-listed public equity to park capital in. Lucid was that vehicle. But here's the problem with that thesis. Even patient capital eventually asks for a plan. And the plan Lucid has right now, cutting a shift, cutting 18% of the workforce, suspending guidance, hoping the gravity supplier situation resolves itself, is not really a plan. It is survival. Now let me give you the bull case, because I promised balance. The bull case is that Lucid genuinely has best-in-class technology. Its powertrain efficiency is real. Its range numbers are real. It has orders. It has a Saudi partner that will not let it fail for political reasons alone. The layoffs, brutal as they are, do exactly what the company needs. They cut the cash burn and align capacity with demand. The gravity supplier issue is fixable. And the leadership, by clearing the decks and pulling guidance early, is buying room to underpromise and overdeliver in the second half of the year. That is a real case. It is not crazy. If Lucid closes 2026 on a stronger note and the gravity ramps cleanly into 2027, this could look like the exact moment the turnaround began. Here's my honest take though. Companies that need 705 layoffs, a suspended guidance, and a WARN Act investigation all in the same week are companies whose margin for error just went to zero. Every quarter from here is a make or break quarter. There is no more room to blame supplier problems. There is no more room for missed deliveries. And if the PIF ever decides that the strategic story is not worth another dilutive capital raise, this company is one bad quarter away from a very ugly conversation. For the 705 people who got the letter last week, none of this analysis matters. They lost their jobs. They may have a legal claim under the WARN Act. And honestly, if you or someone you know is one of them, that is worth talking to an employment lawyer about. For everyone else, investors, EV watchers, anyone who cheered when Lucid was the SPAC everyone wanted to own, the lesson is this. When a company's story requires infinite capital to keep working, the story only works until the capital stops. And when a company's response to a shakeup at the top is to stop telling you what the numbers will be, believe it. Because that silence is telling you the truth. If you found this useful, subscribe. Every couple of days, I break down the business story everyone's about to talk about before it goes fully viral, and I try to do it with actual numbers instead of vibes. Hit the bell if you want the notification. And tell me in the comments, do you think Lucid makes it, or is this the beginning of the end?